Hi, good morning. I'm Leslie Weems. I'm excited to be here today, and we're going to learn everything there is to know that will help you to be successful in your business. And that is starting out with financial statements, how to read them, what the terminology is, and where you should put your attention. Also, we're going to talk about income statements and the balance sheet, and also cash flow. With that said, I would like to take a minute to kind of go around the room and talk about, first you introduce yourself. Second, I want to know why you're here, what you want to get out of the class. And three, what kind of challenges that you're seeing today so that we can overcome those together. I came from GE, with GE for 10 years. I worked for the CEO, and I managed a business of about $450 million. So I'm very familiar with financial statements and the importance of them, and I look forward to sharing my passion with you, and I'm here to help you. I'm all here just to make sure that you're successful in what you're doing today. So with that said, let's go around the room, and then we'll come back and we'll start class. Okay, now we're back, and so now we're going to talk about financial statements. Financial statements, especially for me, when I go into a new organization, a new department, it's important to review the financial statements. And with that said, the profit and loss statement is the key element to looking at the big picture of your business. And in that, it basically gives you a summary of what you're bringing in on the top line, which is when people say top line, they mean revenue. And usually there's a couple of different types of revenue in any business, if it's a fixed, if you're selling widgets or if you're selling a service. Typically 80% of your business is fixed. 20% is variable, where you're going out there trying to keep the business growing. And again, it depends on where you're at in the stage and the maturity of your business. But just to kind of go through that, so you start out with the top line, and we'll go through this in detail in some of the worksheets that I gave you. So if you'll just take a minute to kind of let me walk through the high level, and then we'll get down into the nitty-gritty. First, you have the top line, then you have what are called your cost. And you can hear different terminology within the cost structure. But it's revenue minus cost equals net profit. And there's various within that. Net profit is what you actually have before tax, typically, but after you've run your business. So we're going to get into the different buckets today, and in that, typically, there's fixed assets, fixed cost, and then there's variable cost. Variable costs are going to change. Variable cost, as an example, would be your utility bills, any type of variable expenses as far as maybe gasoline for your employees if it's a service business. Your fixed cost are going to be things that are consistent from month to month or different a period of time. So it could be, your rent is fixed, and so that'll be a fixed cost. So, and then you get into situations like you may have materials that you have to run your business, or which are typically called cost of goods sold. So we'll kind of get into those things on the financial statement piece, but the important thing is to understanding at the end of the day, the goal of any business is to grow the bottom line. And when people say the bottom line, that means the margin of the business, which is the margin that you have at the end of the day to run your business after you've paid all your bills. And then after that, so basically that's what you can go public or whatever, is if you get a typical good business runs at least at a 35% margin. Healthier businesses like, say, healthcare or maybe furniture, things that have more margin or more profit built in, they're more of a markup in the products, you can get up to 70% margin to run your business. So obviously there's a variation. But obviously the tighter your number and the tighter the percentage of your margin is at the end of the day, is going to be that you're going to really need to focus on your cost. Because your costs are going to drive, that's something that you can manage to a certain point, so you can fix as many of the things as you can. But in a typical rule of thumb, 80% of your business is going to come from your people. So you have to figure out how can you get the best use of your people. But obviously that's a different class, but it's important to understand the benefits and efficiencies within the business. So anyway, I just wanted to start out with this. We can talk, we'll have a break for a few minutes and then we'll come back. Thank you.